All right, awesome, Duncan. Thank you for kicking things off. And you guys should see a chart of the cues. If you don't, just the drop down in the upper right, just click on JC and it will switch it over. Fantastic. Okay. All right, so we got both going here, and so I really just kind of want to do a Q&A, for you guys that are doing the class, and just kind of explain, and also just kind of answer some questions. So a couple of things here is some of you. So we've been doing the small lot service for about almost 2 years now, and we kicked it off almost exactly 2 years ago, which it's hard to imagine, hard to believe that it's already been 2 years. And last year we did a class and people were just kind of asking like, hey, I'd like to kind of know more about your methodology. So now it's a year later and I'm just kind of doing an updated version of it. So mainly this is for folks who never took the first class. It's like, hey, I didn't take the first class. I would like to dive deeper into what your methodology is and stuff like that too. And then another question has come up is like, well, if I already took the first class and I want to do it again, what's different? Is it worth it? And I mean, so there's a couple of things. I mean, first, everybody that comes to the class, you'll get a copy of this. If you have Thinkorswim, that makes it easy. Obviously, some of us are also using TradeStation and Tastyworks and other brokerages. And I'll show you how I kind of do this in Tastyworks as well and in TradeStation. Unfortunately, they don't have the utility labels, and so there's pros and cons of the utility labels. There's some ways to kind of work around it as well, and it's not super critical, but it's nice. But some of the main stuff here, and again, this is all with the class, right? If you've got the Squeeze Pro, then you could put that in there. If you've got the RAF, you can put that in there, 10x bars, etc. And I'll show how I use that too. But the main thing is just what we want is a roadmap. And so like here's the cues on a daily chart and a 30-minute chart. And when you're looking at kind of a roadmap, and if you guys remember here, I was starting to get really cautious on the long side. And I was hedging. People were getting annoyed. Why are you hedging? We're losing money on the hedges. But there's things that I watch that, again, over the years and years and years of doing that, it's just part of my checklist. And so that's what I want to show you is not only what I'm looking at on the chart to determine what to do specifically, but also what am I looking at on a macro level? Why would I suddenly get really, really bullish? And why would I suddenly get really, really cautious? Because that's outside of what this chart is. So part of that I'll try to put on here too, like, okay, what's the put call ratio? What's the 10-day moving average? These are some things that I'll look at as well that'll kind of help, and I'll show you some other stuff as well. So this, at a glance, I can see today that it's like, okay, the spiders are neutral. The Qs and IWM still have momentum to the downside, even though there was a huge bounce today. Diamonds and transports are neutral. And then XLY, which is one that I watch pretty closely, it's also a pretty good tell of the markets. And then for the volatility metrics, and don't get too worried about all the stuff that's in there. I'm mostly just kind of like, where are we on the IV rank? Because if I know where we are on the IV rank, I know, what to do in terms of a trade. If it's low IV, okay, in this case of the Qs, it's like, okay, the IV rank is 13%, which basically means that it's pretty low. Okay, great. We could just buy a put. But if IV rank is like 80%, you can't buy a call or buy a put. You're gonna get destroyed. That's when we got to do, maybe we'll do an iron condor, or maybe we'll do a spread. And it's just part of that. It's like, I'm gonna look at a chart and make a decision whether to go long or short. But then from there, we want that added benefit of what is the best option strategy for that. And so, with the service, this is what I'm doing behind the scenes. And so if you're in the service and you're like, okay, you know what, I'm not as interested in how the soup is being made, just keep feeding me the soup, that's totally fine. And that's what the service is for. If you want to take a kind of a deeper dive and, be able to kind of, look at this and understand it more, and again, if you already took the class, is it going to be much different than that? It's the same idea. It's just that the markets have changed a lot. I did learn a lot last year trading the big accounts. So, there's kind of some, just kind of new ways and new things to do there. So there's definitely some updates. But if you took it and you're fine with that, that's fine too. So, you'll still get the signals and stuff like that too. A couple of questions got asked too is like, okay, well, if you're in the small lot service, all right, and then we're going to do the class trades, how does that work? Well, they'll be separate just to keep it easy. So in Sam, nothing's gonna change. We're gonna be doing, I may not do quite as many updates on the days that I'm doing the live trading class, but it'll still be, when I take a break, it's like, okay, here's what's going on. Let's do this. In the class, we're gonna be more active. And the main reason we're gonna be more active is because I want to put we got to swing the club. We're going to spend all of Saturday going over this. And it's like, we got to swing the club, a good dozen times to make sure that you guys know how to do the stuff. So it'll definitely be more active. And then the SAM trades, we'll kind of continue doing the same thing. Let's get our, a couple of trades a week. They'll be posted, all that kind of stuff too. Because the class really is to do a deep dive into the methodology. And of course, Saturday will be fun because we'll be able to kind of hang out. We'll talk about the current markets, what to expect. Are there ways we could position ourselves for some bigger moves? And then if you're newer to like say Thinkorswim, I know some folks, maybe get like Thinkorswim and it's just confusing. We're gonna have plenty of support on hand to kind of help with questions and things like that too. So we don't want anybody to feel intimidated or overwhelmed. And then also, if you're newer to options, don't freak out. Options. The reason options are intimidating is because you go to Amazon and you'll order a book and you get this monstrosity this monstrosity of a book that's 700 pages long, and it's talking about all these complicated deltas and vegas, and honestly, you don't need all that. If you know all that, that's great, but you just don't need it. So like, here's a trade that we have in the small lot account right now, and today was kind of crazy. We did an iron condor on Netflix. So the question in the class would be like, well, why did we do an iron condor on Netflix? Why did we pick this position size? Why didn't we panic and close it out today when the market was puking? Okay, stuff like that. And then we're trying to buy JCOM. I love JCOM here. I cannot get this damn thing for the life of me. So if we put JCOM in here and just say like, okay, well, why do I like it? Well, gosh, I mean, it looks great. Oh my gosh, and I'm really upset because I'm looking at this and we were trying to buy a pullback to here and those bastards didn't fill me. So that happens sometimes. So that's something that it's frustrating. We actually were bidding exactly for that. So sometimes what I try to do is that when we do get something like this, even getting an alert, and it's just like, just get it. We can't get it at 250. It doesn't matter. Just get it. So we'll talk about that too. And that's just trading. Demo accounts you always get filled. In real life, it's real life. And then we did put on today kind of a hedge for Monday and for next week, and it's pretty cheap. Bought it for $1.40, and it's 20 points wide. So this is for $140 a contract, and it could potentially make $2,000 a contract. So it's a nice thing in case we puke. And so a big part of small lot is it's so important to constantly have a balanced portfolio. You never want a situation where the market is puking down 5% and you're getting killed. That means that you're not managing your portfolio correctly. Or the market's up 5%, you're getting killed because you're short. So you got to have balance in the whole goal of the small lot is that you're able to kind of grow your account steadily. Obviously, not every trade's going to work, but you got to manage that portfolio in such a way that you can have the confidence to do this. This shouldn't be something where it's like you have a good month and then you blow up your account the next month. That does not happen in small lot. Okay, this is something about it is steady. It is steady gains. It's probably taking you don't take as much risk as you may like, but you never have to wake up to a horror show, if that makes sense. I mean, there's definitely gonna be some days where like, oh, this sucks, but it's like, oh, we lost 3% or 4% or something like that. And sometimes things can get away, but it's just it's just part of it is just you got to have your portfolio management in such a way that this shouldn't be nerve-wracking, I guess, so to speak. Yeah, I'm a huge fan of the Keltner channels for a couple of reasons. One of the main reasons is that algos use this quite a bit, and you can use them on any time frame. But a common thing is that you get to 2 ATR, flush it back to the mean, and all the people who chase get stopped out. So part of my rule is I never buy at like say 2 ATR. And if you look at say GameStop, how insane is this? That move. But even now, it's settled down. It's a reasonable target at this point, if it's going to get going again, would be 200. Like, I don't think it's going to do what it did before. So, that's an interesting stock. I think it's, you got to be careful with stuff like that. Google is one that I love here, and my gosh, this is one of the better looking bullish charts that are out there. But on the other hand, if we're looking at something like Tesla, it's like, I got a lot of questions today on Tesla. Are you going to buy it? Are you going to buy it? I'm like, God, no. There's so many things wrong with this here. You've got, the EMAs are stacked negative, right? You've got, we're at the 60-day channel. We're down at the lows of the 60-day channel. You don't buy there. Of course, the squeeze fired short, and it's still valid. That's so obviously I'm keeping an eye on Tesla, but it's like there's a reason why, I'm not trying to buy it on the way down. Okay, it's not a setup I like. On the other hand, we all did this one together, and this was an amazing move, right? So we're not trading Tesla, we're not trading Netflix, we're trading specific high probability moments in time that are appropriate for a small account, right? That's the whole gist of it. And so if we look at Netflix and say, like, all right, well, why were we doing an iron condor on Netflix? Why not short it, et cetera, et cetera, et cetera? Because a squeeze is fired short, right? Well, it goes back to the structure of this. And the structure of this is that when you have something like this and it's like, okay, the Keltner channels are flat, right? You've got, and the VWAP will be updated for next week. But, it's just like the way the Bollinger Band here is at the bottom of its range. It doesn't, when you see something like this, that's about as far to the downside it's going to go. So it's like, okay, well, I don't want to buy it. I'm not going to short it. Let's do an iron condor. So there's things like that that'll be part of kind of like, your checklist. When do you buy calls? When do you buy calls if you think it's going to go up? When do you buy puts when you think it's going to go down? All right. When do you have to, then you can look at the volatility matrix and say, well, instead of buying calls or puts, we're going to buy a put debit spread or sell a call credit spread, because that's going to be more advantageous. Or we're actually not even going to focus on direction. We're going to do an iron condor. So all that stuff where, I can look at this stuff and distill that in a second, right? But I want you guys to have the same checklist so you can do the same thing. And then it's so important here is just to learn, again, 2 or 3 well thought out, well planned trades a week are all you need to be able to, make a really nice living trading. So part of it is also learning what not to do. And, that'll be part of it too, is going like, look, the way this is set up, so you don't do this, this, and this, because over time, this is not going to make you money. So anyway, yeah, well, obviously I don't want to teach the class right now. In fact, I need to start grabbing a lot of slides for tomorrow, because I always like to have current slides. And so what we're going to do tomorrow is we're going to spend time. I want you guys to understand everything on this chart. So we'll go through each of these, why they're important. So it's going to be kind of a nice, rudimentary. The first half of the class is going to be kind of a nice basic. Let's just assume, like I said, my 11-year-old's taking it right. Let's just assume nobody knows nothing. And I know some of you know this stuff. You've been through it. But I promise, when you go through it again, you get new aha moments. I do. I know this stuff, but when I'm forced to teach it from the basics, I get aha moments. So that part's good. And then the second half of the class, we're going to bring it all together. It's like, okay, now this is what you do is, in terms of a checklist. This is how we find trades, and we'll spend some time looking for trades for Monday, because Monday, Tuesday, Wednesday next week could be pretty crazy. Yeah, so Nick, I'll talk about these labels. I'll talk about what they mean, all that kind of stuff, just so there's no confusion. Now, again, if you don't have TOS, unfortunately, they're the only ones I think we've been able to get the labels to work for. There's a few hacks and a few workarounds. So the labels are nice, but don't worry too much about it. A lot of the stuff you can chart too. So like the ADX, you can actually chart it. You can put it on your chart. It just means that your chart will be a little bit more crowded, but that's all right. Yeah. Oh, yeah. So at the third standard, if something's hold on. So if something's at the third standard deviation Keltner channel, which can happen, right? If we look at, say, the Qs, especially an index, so you just want to know like how to read it here. So on something like this, we're going to look at this and say, my God, this is crazy. why weren't we shorting this? Because there was a squeeze. So part of this is just like, okay, what's happening here? Oh, there's a squeeze. A squeeze can push us up and ride the 2 and 3 ATR higher. So we're not shorting that if there's the power of a squeeze, especially if there's a weekly squeeze, because there was a weekly squeeze here too. So there's things like that that we want to know. But then when there's not a squeeze, it's a whole different ballgame. And you can see when there's not a squeeze, we're generally stuck between a 2 ATR range. You get 2 ATR away from the mean, you go back to the mean. 2 ATR away from the mean, same thing to the upside. And those are fun. And, they're not as exciting as this, but you can make a lot of money just understanding this pattern. And it's just, over and over and over again. Okay. Lucky Jeff, I like that name. So apart from the options 101 videos, is there anything else we need to do to prepare for Saturday? The main thing, Lucky, is that if you are newer to options, please take the time to watch the options 101 video. Again, I'm not going to make things too complicated, but like a butterfly. To me, a butterfly when I first started was extremely confusing. And so I'll spell this out as to why, and don't worry if this looks complicated. It's just we'll go through and just kind of, it's just kind of understanding, well, why a butterfly, what makes sense with it, because we also do stuff that what I would simply say is pretty straightforward. A good example of this is JCOM. We didn't get filled today, but it's kind of like, I love JCOM, and when it flushes down, I want to buy the April 115 calls at $2.50. We did flush down today, I just didn't get filled. That's a pretty straightforward option play. But the beauty of options, there's so many things that you can do. So with Netflix, with the premiums this high, basically what we're able to do in a small account is just say, okay, we're going to sell the 550 call. Now, keep this in mind. Again, if you're newer to options, and don't worry. So here's the 550 call, and then the 490 put. Okay, so basically we're looking at Netflix here, and it's $516. So let's say it's trading about right here. And we're just saying over the next 14 days, we're making a strategic bet based on the chart that it's not going to be able to get through 550, and it's not going to be able to get through 490. If you've ever bought a call and it went to zero, that's our goal there. We actually are selling that, but we're not selling it naked. So the idea with this, so remember 550, 490, and then we just kind of come back to our chart and say, all right, well, why would we even choose this? It's just like, well, the structure, okay, the structure is not there to just go long and buy a call. That doesn't make any sense. And you'll notice here that basically the pattern that it's following is plus, it'll go plus 1 ATR, maybe minus 1 ATR. And you can see here that, yeah, we did flush down a little bit, but what we sold though was down here at minus 3 ATR. And stocks just, stocks that are consolidating like this generally just never get, rarely, okay, let's say 4% of the time we're never going to get to 3 ATR. So with this specific pattern. And so that's why we're just saying, you know what, we're gonna sell this call, we're gonna sell this put, and do it as a spread so it's safe, and we're just betting that Netflix is going to stay in here. So yeah, it's sexier to like, let's buy here and flip it here, but my God, this is so much easier. And again, what we're looking for is that consistency, right? And so we just kind of look for strategies where, yeah, I love finding opportunities where you can just buy calls, buy them at 3 and sell them at 10. That's a great way to make money. But what a lot of people don't understand is that's a rare opportunity. Okay, it's most of the time it's the worst trade you can do. So those are my favorite trades, but you got to know when it's safe to do them. Yeah, so if you've got IB, okay, so I'm obviously familiar with interactive brokers. I don't use interactive brokers. So I will, but I know they have a lot of the tools, like ADX, Keltner channels and stuff like that too. And so, I will actually have a chart. I will create some charts that don't have labels so you can see what they look like. Yeah, we'll talk about volume and stuff like that too. Oh, I use IB to trade and toss to chart. Awesome. Yeah, and if you've already taken the class and you just want to do the live trading, I actually don't exactly know the answer to that. A couple people have asked that question. If you want to, so support is going to be pretty busy today and tonight and tomorrow morning. But I would just email service or if someone from support's in the room and can answer that question. But they'll take care of all that and say, I don't know if that is an option or not, but it doesn't hurt to ask. Yeah, so option seller. So one of the main things of this, and of course it's fun to look at the chart and all this kind of stuff too, but the whole secret to trading is portfolio management. So you can know how everything on here works, but if you don't understand portfolio management, you're screwed. How do you manage drawdowns? If you were 100% long on Monday, you know, and you lost half your account this week, you don't understand portfolio management. No, it's just like that's how I learned. Like the first time I got killed, I was like, oh, maybe I should be doing something different. So that's the over the course of 30 years of doing this and really wanting to avoid as much pain and suffering as possible while at the same time taking risk. Those are the strategies I'm going to talk about. So it's oh yeah, no, the checklist will definitely be updated from the last class. You guys have copies of the checklist from the last class, but we'll be updating that significantly. Um, so it's funny. I mean, people. Well, I'm in small lot and the gold room. I know we're for a couple of weeks there, and and by the way, this is a tell. People are getting annoyed. Like, why are you always putting on hedges? They just lose money. My hedge isn't working. And I have a tell is that when the amount of people that are complaining about my hedge is not working reaches a certain threshold, the market's about ready to top. And it's actually a really good indicator. So it's a weird thing. It's a complacency thing. And I get it. I don't want my hedges to expire worthless either, but think about it. If your hedges are expiring worthless, it means your longs are doing okay. So it just means that, your insurance policy, you don't need it, but you had it in place. But then, like this week when we had hedges in place, it was like, thank God we had hedges in place, or it would have been really ugly. So it's just, again, I've done this for a long time, and it doesn't matter how long you've done this, you still don't know what's going to happen next, but you've seen the movie, right? You've seen the movie, you kind of know where the plot twists happen. You don't know it exactly, and this market is crazy. So I want to take all the knowledge, all the pain, all the suffering that I've had to experience over the years, and just show, and like the small lot account, again, it's off. It's about 2% off of its all-time highs, which I think we hit on. What did we hit? Maybe it was on Monday or Tuesday. I don't remember, but mostly it's because of silver. We've got a longer-term position in silver that's just taking a beating. But I actually want to add to it, so we'll talk to that too. The old, yeah, the CBR is it's a good ratio actually, but it's good because I use it for everybody's advantage. All right, guys. So hopefully that helps. And so I see a lot of great questions like how do we manage the iron condor and how we do this, and we'll dive into that tomorrow because I seriously do need to finish my slides because if I'm still working on them at 11 o'clock tonight, my wife will slip my wrist. Not really, but she won't be pleased. And then we will get started tomorrow at noon. The way I do these classes is that a lot of times people ask, like, can I have a copy of the slides in advance? I do not like using old charts. So the reason you don't get the slides in advance is I'll be creating a lot of them tonight and in the morning using current charts, like as of today's close. And I just think that's a much more powerful learning opportunity. But when it's over, you'll obviously get a copy of the presentation. I also leave time during the presentation for questions, and I can create these things pretty fast. And so as I see a theme of like, well, how do we do this? How do we do this? Boom, let's create a slide. Let's make sure that that's included on the checklist. And so there'll be some time for that too. And then if you're doing the live trading, we keep it going. So we kind of add to it as we go, and we'll add live trading examples to the playbook. And so at the end of it, if you just do the Saturday class, that's fine. You're going to get the playbook from the Saturday class. If you do the live trading, you get kind of an expanded playbook because it's going to include the examples from the live trading and, gives you a reference. Is there a minimum? Yeah, no, for sure, Debbie. Absolutely. Is there a minimum? Okay, so I base it on like a 10K account, but here's the thing. I know some people in there have 1K accounts, some have 5K, some have 50K. It's all over the place. And so what I do is I base it on percentages. So, and I was flying today when I did the spider butterfly, so I might have gotten that percentage wrong. But generally, like we've had the small account has gone from 10 to like about 50, and I'm gonna look to probably reset it here after this class is over, back to 10. Um, and a lot of people, well, when are you going to reset it again? And honestly, it doesn't matter. But I know people like that. They want to, let's get back to 10. I want to, you did 10 to 50. Let's go back to 10 and do it again. But if I'm doing say, like this Netflix being a good example, when I did this, I did this based on a $50,000 account, right? So I just said, it's $5 wide, and I'm just going to make my math easy. So $2 credit, I mean, it's a $3 max loss. So 3 times 9 is 3,000. Do I do that right? 3 times 9 is $3,600. So how much risk am I taking on this account? Obviously, if you've got a $10,000 account, you can't do 9 contracts. So $3,600 divided by $50,000 is 7.2%. So it's a 7.2% risk. And so then you can say, like, okay, if I have a $10,000 account and I want to do the same risk, 0.072, that means I could risk $720. So, $3. So you could do, what is that, about 2.5 contracts, right? That makes it tough. So that's the idea. And we'll talk about that. Like, what do you round up? Do you round down? It'll depend on your account goals. So maybe we need to make a spreadsheet for that, because I don't know how many people have questions on that, but that might be something that's worth doing too. Yes. So we're going to be, trade management, exit strategies, all that kind of stuff. Heather, so the timeline is we went from 10K to 50K in, let's see, we started 10K in July. So it was about 6, 7, 8 months. And then we'll probably reset it to 10K maybe like, at the end of March or something like that. Yeah, it's a good question. So for a 10K account, would you have all your cash invested? Usually we're never fully invested. So typically it might be about 30% invested depending on the market conditions. Sometimes we go to 90% invested depending on the market conditions. And we'll go over that too. Yeah, no, there's some great options books out there. Happy to recommend them. It's always good to dive in and do all that kind of stuff too. All right, guys. Well, I am going to start grabbing some slides. And like I said, I hope we're going to spend a lot of time tomorrow, like going through this kind of in slow motion, step by step. My goal with this is that you guys come out of the class going, aha, this is a lot easier than I thought it was. Because I know when I'm, when the market's open and I'm reviewing stuff, I mean, I'm going pretty fast, right? But there's a method to the madness. And once you understand the method to the madness, it's like, oh, okay, this really, no offense, John, this isn't that hard. And it's like, yeah, I know. But, it took me 30 years to figure out how to make it not that hard. And so that's the thing. And a lot of this is just learning what not to do. That's a huge part of it. Yeah, hasta mañana. All right, guys, have a fantastic evening. If you guys are going to be whining and dining tonight, have a sip for me. And I look forward to working with you guys tomorrow.